Hey, good afternoon. How are you? This is Mark Fuller, manager of wealth. Just wanted to stop in real quick and drop a line. Wanted to discuss a quick topic. This will just be a quick couple of minutes. Just want to put a thought in your head. I want you to think about this. Um, what is your life worth in economic terms? And how much do the people who count on you to produce day in, day out, week in, week out, month in, month out, year in, year out, how much do they count on your economic value? How much do they count on the revenue that you bring in, on the income that you bring in? This is a very important question because there are a lot of very successful, and I term very successful as a person who is able to very consistently meet all of their obligations and experience a decent quality of life for themselves, the people around them, and just literally enjoy their life. I think it's important to be successful at literally having a good life. But there are a lot of successful people out here who really have never thought about what their life is worth in economic terms. And let's just talk about that real quick. Um, Most people, when they start to look at buying life insurance, how much do I want to insure my life for? Most people's process goes to a combination of what they believe is affordability and a sum of money that they've never had in the bank, in their pocket at one time. So a person may say to themselves, if something happens to me, my wife is going to get $250,000. My wife is going to get $500,000. In no time have they ever had $500,000 cash at any one time. So they figure, they could pay the house off, pay the car off, they'll be okay. But what people don't think about is if you're out here making 80 to 100 to $120,000 a year, over 10 years, you're generating maybe $1.2 million. My question to you is what replaces that $1.2 million? Because right now, you're paying the house note with that, you're paying the car note, you're paying for food, you're paying for gas, you're paying for the kids' schools and their athletic programs, you're funding your retirement. Are all those things still supposed to happen if you or your spouse, or in the case of being a single parent, are all the things that you're trying to provide to your kids, are those things still supposed to happen? I will tell you this: you have to start to look at how the legal system begins looking at your economic value. If you go out right now and as a 40-year-old and you step out of the house and someone recklessly runs into you as you're crossing the street and you had the right of way, the lawyer that takes your case, he's going to look at your life and he's going to say, well, how much did Mark make? Oh, $80,000? How old was he? 40? Well, his family was depending on at least $80,000 for at least the next 25 years, right? Because he was 40 and you figure it worked till 65. That's where the math is going to begin. So you really have to look at, there's an economic value there of a couple $1,000,000. They're immediately going after that driver for that kind of money. Okay? Now, ask yourself this question: did the person who stepped out in the street, did they actually have a $2 million life insurance policy? Did they ensure the economic value of their life? Did they ensure their economic value to their family? Do husbands ensure their economic value to their family for their wives? Do wives ensure the economic value to their family for their husbands and their children? It's very important for us to think about this and to look at economical ways to secure and to ensure as much of your economic value as possible. Because two things are very important. Number one, I promise you, you can never have enough capital. things will get more expensive. Bread will go up, gas will go up, property insurance will go up, car insurance will go up. Everything will go up over time. Think about what those things I just named, what they cost 20 years ago. Your family still has to live, right? And they need every dime of income that they can get. The second thing is, um, when everybody is running around talking about generational wealth, generational wealth, generational wealth, what we are calling financial literacy is really financial illiteracy. The absolute most effective, efficient, most inexpensive way to create generational wealth is an insurance policy. And most people, they when they think of rich people and they hear, oh, trust fund baby, that person had a trust fund, his grandparents left him some money and what have you. All that was an insurance policy that once it was cashed in, that insurance policy ended up being dispersed out and will be dispersed out forever on either a monthly, a quarterly, or an annual basis to the heirs of that fund. All they did was say, hey, when I die, $5 million goes into this fund. The interest on that $5 million every year gets distributed to whomever I've named as the beneficiaries of, as the recipient. And when they pass away, that goes to their heirs. That is the cheapest, most inexpensive way to create instant generational wealth. And guess what? On the day that you fill out the application for life insurance, economic wealth, and generational wealth is created instantly. If you actually increase your knowledge about what to do with the capital, how to distribute the capital, how to make sure it goes on forever and ever and ever, then you've really created generational wealth. So I'm not going to drill down on that. I'll do that in another video, as to how to effectively use an insurance policy and the different types of insurance policies. Now and again, I'm giving you this information, folks. I do not sell life insurance policies. I have excellent people who take care of me, take care of my family, take care of all of our clients, and what have you. But I'm sharing this because some people, honestly, are literally paying more every month for their car insurance than they are for their life insurance. What most people are paying for their car insurance would give seven figures in tax-free capital to their family should anything happen to them. Think about that for a second. Think about the fact that the $150 or $200 you're paying a month for your car insurance to ensure if anything happens to your car that it will be repaired, or if you injure somebody, they'll get a check or what have you. But when it comes to your life, the economic engine of your family, you're not spending that type of capital to simply ensure that all that you've worked for, all you've dreamed about, all you've planned for is not happening. So I'm going to leave you with that. What is the economic value of your life? I want you to just simply do the math of how much income you're earning right now over how many years you have left to work. Do the multiplication, and then look at how you're insured right now and ask yourself the question, is that enough? Can my family survive on that meager sum of money? Or did I just make this choice based on the fact that it was a large sum of money that I've never had before or my spouse has never had before? I'll be back in another video to talk to you about the types of insurance, and I'll even be back to talk to you about the type of insurance that you make the investment and you'll get all of that back, because the true way the wealthy use life insurance is, well, life insurance is not for the person who's going to die and leaving the money. It's actually for the person while they're alive, and I'll show you how to use that and talk to you about that. But again, think about the economic value of your life and how much of the economic value of your life you have covered. And if you don't have it covered, do something about it today. If you need an excellent referral, of a high integrity individual, give me a call at 410 908 5987. 410 908 5987, and I'll put you onto some people who can educate you and give you some resources so that you can really understand what's going on out here and what wonderful opportunities you have to create generational wealth without having to die to do it. Have a great day.